Regarding autonomous vehicles, we estimate that the robotaxi market may reach a valuation of $28 trillion by the end of the decade. This is the reason why, according to our valuation, this is where the majority of Tesla's value will come from. This is because it will completely alter the company's business model, which is currently essentially a one-time sale of an electric vehicle, to a recurring revenue stream that we believe could be generated from the robotaxi service that Tesla will introduce. Naturally, we believe that robotaxis are so disruptive because they can be purchased for less than the current ride-hail services and, well, far less than the cost of operating a private vehicle in the United States, which is currently about 70 cents per mile. We anticipate higher price points in the beginning, but at scale, robotaxis might be as little as 25 cents. Therefore, we look for companies that meet a minimum 15% compound annual growth rate hurdle over a 5-year period when evaluating names like Tesla in our assessment. Additionally, as we are working on the name, we are evaluating it qualitatively. As you can see from this slide, we start by looking at culture and people management. Well, this considers what we think of the management group. Why don't you start us started on Tesla here, Sam? Indeed, and let me just state that these qualitative ratings are the potential for Tesla's robotaxi, the security of autonomous vehicles, and the difficulties Tesla has in the Chinese market are just a few of the important subjects we'll discuss in this video as we examine the degree of confidence in Tesla stock. We'll also explore Elon Musk's pivotal role and the company's potential for expansion through creative initiatives like the Megapack division. We'll talk about the regulatory issues surrounding autonomous vehicles being eased, the optimism and delays surrounding Tesla's robotaxi network, and the significance of depending on various sources and verified facts for reliable information. We'll also discuss the difficulties in assessing Tesla's autonomous driving company because of cautious assessments and erratic market patterns. Prepare yourself for a thorough examination of the factors that analysts believe are behind the sharp increase in Tesla stock prices. This video is for you if you have a strong interest in Tesla and the development of autonomous technology. To remain up to date on the most recent Tesla news and insights, remember to like and subscribe to Tesla Stock News. Let's get started. Let's now examine the likelihood that Tesla's robotaxi will materialize and the implications of the regulatory environment for the company's aspirational goals. We'll also talk about the safety of driverless cars, which is a hot topic because both regulators and prospective buyers are quite concerned about safety. Although it has its own set of regulatory obstacles, China is a sizable market for Tesla. What obstacles must Tesla overcome in order to be successful there? Cayman risk, which deals with Tesla's significant reliance on Elon Musk, is another crucial factor. What would happen if he took a step back? We'll talk about the dangers of having someone so important in the business. How much is Tesla worth, and what are investors assuming about its growth? Are these too optimistic or realistic? For years, Elon Musk has been promising us a completely driverless vehicle, but it hasn't happened yet. Complete autonomy is difficult to achieve. Creating a car that can drive itself safely in any situation is more important than simply creating one that can. A robotaxi network might be launched in the coming years, according to some academics, notwithstanding the delays. They base this on thorough analysis and safety data. Timeline uncertainties, however, continue to be a major obstacle. On the regulatory front, there is positive news. More states and nations are becoming receptive to the concept of autonomous vehicles, according to Tasha Keeney of ARK Invest. This represents a significant change from the previous position of strict regulation and skepticism. The startling increase in traffic accidents and fatalities, which are frequently caused by distracted driving, particularly when using smartphones, is one factor contributing to this shift. By lowering human error, autonomous cars may contribute to safer roads. Tesla's plans may benefit greatly from this relaxation of regulatory concerns. Imagine hearing this news as an ordinary American. Given the delays thus far, you may have doubts about Tesla's capacity to introduce completely autonomous vehicles. However, you may feel more optimistic that these futuristic cars are getting closer to being a reality now that regulatory worries have subsided. Additionally, you may be worried about Tesla's dependence on Elon Musk and worry, well, According to Kathy Wood of ARK Invest, driverless automobiles are far safer than cars that are operated by humans. Based on accident statistics, driverless cars may be up to 80% safer per data cited by ARK Invest. For example, compared to a manually operated Tesla, Tesla's full self-driving system is approximately 5 times safer, and there is room for development. This significant safety margin is revolutionary for transportation in the future. Tasha Keeney highlights how these safety enhancements have an impact. According to her, fewer collisions translate into safer roads, lower insurance premiums, and more public trust in autonomous technology. For everyone worried about road safety and driving in the future, this safety factor is a big matter. It demonstrates why ARK Invest has such high hopes for Tesla's autonomous car plan and its ability to completely transform the auto industry. Additionally, Kathy Wood draws attention to the regulatory obstacles that Tesla is currently encountering in China. The potential for the corporation to take data outside of China is being discussed with the Chinese government. This is a sensitive topic since Tesla's business operations may be greatly impacted by Chinese laws governing AI and autonomous driving. In such a large and significant market, Tesla's success depends on navigating these regulatory seas. The results of these talks may establish a standard for how foreign businesses manage data and AI laws in China, Tasha Keeney continues. The stakes are enormous, and how Tesla handles this issue might have an impact on the industry's standards for data handling and AI research, as well as its future in China. For Tesla, this is a crucial moment, and ARK Invest is keeping a careful eye on these events. Although there are risks associated, new routes hold promise for Tesla's growth. Driving the autonomous team toward a commercial launch is a major responsibility of Elon Musk. Tesla's success in this field is largely due to his leadership and vision. Finding a visionary leader to succeed Elon Musk is difficult, though. Maintaining this kind of creative leadership is crucial to the company's future success, so Musk's departure might be a serious risk. Autonomy and automobile technology are developing at a breakneck pace. Even though Elon Musk has played a big role in advocating for autonomy, technological and algorithmic developments may have made his contribution less important. These developments are propelling the sector ahead and increasing the dependability and effectiveness of autonomous vehicles. The enterprise value to adjusted EBITDA is also impacted by elements like stock-based pay and R&D expenditures, demonstrating the financial commitments Tesla is making to maintain its competitive edge. With its unique products and planned projects, Tesla has a bright future ahead of it. The business has remarkable revenue potential and profit margins, especially in its Megapack division. With plans to establish a second Megapack facility over the next 6 to 8 months, this category is well positioned for growth. It is anticipated that this development will greatly increase Tesla's revenue and demonstrate the company's capacity for innovation and market expansion. It is imperative to take into account the comparatively low multiple when evaluating the valuation of Tesla's autonomous driving business lines. Tell me if you require any further modifications. A workforce at Tesla is currently producing 6 million cars annually. As a result, the Tesla fleet is actually growing significantly. I mean, by the end of this year, there will be more than 7 million vehicles. So, all we had, and our Fremont factory is the largest auto manufacturing in North America at the moment. Thus, and we shattered the previous production record from the NUMI era. In fact, it's quite crazy. In the San Francisco Bay Area, we have a massive auto plant. It's not exactly the most affordable location for an automobile factory. You know, it's like that in the Swiss Alps or whatever. However, we were still able to produce high-quality automobiles, which is a credit to our fantastic staff in Fremont. Congratulations to the Fremont crew, then. Moving on to the larger picture, Tesla's appeal is still soaring, as evidenced by the demand for its products worldwide, such as the Cybertruck, which has come to represent innovation and status for both tech titans and celebrities. This broad demand demonstrates Tesla's strong market penetration and impact, but popularity comes with a lot of scrutiny. Now that they are being scrutinized, Tesla must demonstrate that their inventions can adhere to strict safety and legal requirements. Every new feature and technology must go through the regulatory approval process, which can be just as difficult as the technological development itself, especially if they are as